This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on January the 11th, 2013. Our time is 8:48. That is Mountain, and the time in the Eastern time zone is 10:48. Our radio show runs in Toronto on News Talk 1010. Also in Edmonton, 630 CHED, and QR77 in Calgary. We obviously are on the radio. We are online. You can listen to us online. Harold's websites, rarecoloreddiamonds.com or HESradio.com, have the shows archived, and we have a podcast totally on demand anytime you want. Just go to iTunes, get it on your smartphone, your iPad, your computer. You can take this radio show anywhere. Sign up for the free podcast. Does not cost you a thing. Now, we should mention as we start the show that we'll talk about diamonds a little later on, but Harold has an auction coming up on January the 30th, which is a Wednesday at 8 p.m. Eastern, 6 p.m. Mountain. And you want to go to hsfineauctions.com for that auction, which will feature diamonds. It will feature gold and silver pieces and a lot more. hsfineauctions.com. There will be a catalog up there very, very soon, but mark this down. Wednesday, January 30th, 8 p.m. Eastern, and that would be 6 p.m. Mountain Time. As we start our show today, it was amazing. The United States, they get through the fiscal cliff. They add $4 trillion of debt to their debt, which is mounting every day. Now the debt ceiling, that fight begins, and they're talking about a way around it. If they can't come to an agreement, what we'll do is mint a $1 trillion coin. Yeah, that's a good idea. Also, currency wars, and we're seeing Britain, Japan, Switzerland, currencies around the world are being debased and manipulated to obviously take into advantage that country's currency for their exports. And we're seeing that all around the world. Quantitative easing in the United States and Britain. Japan announced over $100 billion in quantitative easing. They're trying to get inflation. They're in deflation. They're trying to get inflation to 2%. Their new prime minister, he wants lots of quantitative easing. It's not a surprise, Harold. People are moving into gold, silver, and diamonds all around the world. In particular, Asia, they're starting to see some inflation in China. We're getting the currency debasement. We see the United States not being able to fix their debt ceiling problems and coming up with screwy ideas like a $1 trillion coin to solve the problem, to get around it. It's not a surprise. People are moving into hard assets.
You bet, Randy, and a lot of it out of fear, because there's so much going on that is frightening in the markets right now, and they just don't seem to have any rhyme or reason at this point here. The markets are all over the place as they seem to be jockeying for position. You know, on Thursday the market was up. Gold was up so heavily, it was up $20 on the day. Silver was up $1. The markets were very, very strong. Oil was up over $1 on the day, and the U.S. dollar had dropped substantially. The U.S. dollar should be dropping, and there's an action-reaction between the gold market and the U.S. dollar. As the U.S. dollar falls, gold goes substantially higher. That's the way it's been for the last 12, going on 13 years. When gold was down at $250, the U.S. dollar was one of the strongest currencies in the world. Now the U.S. dollar is one of the weaker currencies, and gold's up at $1,1700. So you can see the direct correlation between gold and the dollar, and the fact is, as the dollar continues to fall, we will see the gold market continue to run. The odd thing is that the dollar is down today. It's only down 14 points on the day, but it's now down below the 80-cent level. What we really want to see is the U.S. dollar get down to that 82.50 level that we saw a few years back when silver hit 50 and the gold market hit 1900. Since then, they rallied the U.S. dollar back up to the 82, 83, 84 cent level. That's when you saw silver drop back down to $26. You saw the gold market drop back down to 15 and change. So you can see the direct correlation between the U.S. dollar and the gold and silver markets. The good thing is that we know that the U.S. and the Federal Reserve is going to continue to print money. That will continue to weaken the dollar as the situation continues to happen. So as the Federal Reserve prints more and more and more money, what it does, it brings more and more dollars being printed onto the marketplace, and it reduces the value and the buying power of the dollar. That's why it's inflationary. Add to the fact that oil's been skyrocketing lately to where just about a month and a half ago it was down in the low $80 range. Now it's up to $93, and that's with oil being down $1 today. Very bullish on the oil market. Even though it's extremely volatile at this point, I do believe that over the next 2 years we will see oil trading in the $150 to $200 range. And now that Iran is getting that much closer to a nuclear bomb, I think that we could see something happen this year that could change that situation, and any type of war between Iran and Israel will result in oil prices going to the $150 to $170 level. By the way, starting on Monday, we will be doing a daily market update. It's called the Daily Market Update. Isn't that ingenious of us? It's going to be able to be heard on HESradio.com and RareColoredDiamonds.com. So I will do this market update at 4 o'clock Eastern Time. It'll take about a half an hour to download it and get it into the system, and you'll be able to go back and listen to what happened in the market. And it'll be about a 5-minute report every single day, Monday to Friday, but we're going to bring that to you starting on Monday, and that will be the Daily Market Report, and it'll be on HESradio.com, RareColoredDiamonds.com, obviously totally free to all of our listeners. So we're excited to bring that to you. As Randy mentioned, we've got a new auction coming up for diamonds and gold on January the 30th. It's going to be at 8 o'clock Eastern Time, 6 o'clock Mountain Time, and you definitely want to sign up for that early. You want to go to our website, hsfineauctions.com, sign up, get your password, and then again, you're going to be able to view the catalog sometime next week. So we're very, very excited about that. You know, all in all, the markets are in disarray. There's no real trend to the market. Yesterday or on Thursday, the S&P hit a 5-year high, but if you look at the overall market conditions, nobody can really understand why. The general public is not in the market. It's way too dangerous at this point. All you have to do is look from 1999 to 2013 and see if you've made any money on your RSPs. The fact is that most people have not made a dime in the stock and mutual fund markets over the last decade, and it's getting more and more risky. The fact is that it's not comfortable anymore for the small investor. And again, that's obvious by the volatility in this market. There was a report written a few months ago called Billionaires Dumping Stocks. If you haven't seen it, contact us and we'll send it out to you for free. It's extremely important. But this report that was written by a very, very credible analyst, somebody who's got tremendous credibility, is saying that there's a chance that we could see the Dow Jones literally drop all the way down by 70, 80, or 90%. That's how frightening it is. And if you look on Kitco, actually, today, on Friday, they're talking about a similar situation that could drop the Dow back down to about the 3,300 level. There's so much risk in the markets at this particular point. Again, it makes no sense that if you work so hard and you've had some success and put away a little bit of money, to just sit there and keep that money in the stock market where you have absolutely no control over. At this particular point, if you look at what the returns have been over the last decade in stocks, it's not a good area for the small investor to put his money. Now, you never put all of your money in one asset, and we say diversification is extremely important, and we know that people that listen to this show, most are not going to sell their stocks in mutual funds. Most are not going to go and liquidate their RSP and pay the penalty and the taxes and all that, but there are other things you can do. As the old saying goes, it's better to be safe than sorry. At this particular point, if some of the top experts in the world are predicting that the stock market could fall 70, 80, or 90%, why in the world would you want to keep your money in the market at this time? When with your RSP, all you would need to do is convert it to a GIC, one that's comfortable with the RSP laws in Canada, and just keep your money in cash. Sure, you're not going to make any money, but you're not going to lose it all either. And the fact is, in 1999, when stocks like Nortel dropped from $110 down to below $1, if that doesn't give you an indication as to how dangerous those markets are, I don't know what will. On top of that, in 2008, when the Dow dropped from 14,000 all the way down to 6,500, most people are not even back to break even at this particular point. Again, every market has its time. Back in the 90s, the stock markets, the mutual fund markets, the U.S. dollar, the real estate markets were extremely strong. Those days are not here right now. You've got to look at alternative investments in order to protect what you have and possibly profit over the next 5 to 10 years. We've been doing this show for now 13 years now, going on 13 years. When we first started the show, gold was at $250, and we've hit as high as $1,920. Silver was at $3.80, and we've hit as high as $50. Oil is at $18, and it's gone to $150. Again, we've made a lot of money in these markets being conservative and owning the right assets over the last decade or so, and this is going to continue because there is nothing that is bullish in the U.S. and world economies at this particular point. Europe still has the sovereign debt situation, and it's extreme. Countries are going bankrupt. In Europe, in all over Europe, Greece and Italy and Spain and Portugal and Ireland. I mean, this is unprecedented. It's never happened in history before. On top of that, you've got the United States, the number one economy in the world, that is going to owe $20 trillion. We can't even fathom how much money that is. $20 trillion is a number that could never be paid back, and eventually it's going to be the destruction of the U.S. financial system, possibly because they're not going to be able to pay back that money, and they're going to lose their credit rating, just like we would do if we went bankrupt or didn't pay our bills on time. That's how dangerous the markets are at this point. So again, your choices are either sit back and leave your investments the way that they are and see what happens. And if you do lose your money in stocks and mutual funds, you can always go with the adage that misery loves company. Everybody was in that situation. But 90% of the money is made by 10% of the people, and the 10% are not in stocks and mutual funds at this point. In fact, they're in assets like gold, silver, diamonds, art, classic cars, all those type of assets. If you look at what's happening in the auction business, it's never been stronger than it is now. I watched a couple car auctions over the last couple weeks, and cars are selling for numbers that you could not believe possible, and the same thing is happening in diamond auctions at this particular point. So, again, you've got to be very, very careful. There are experts saying that the stock market could drop 50, 60, 70%, and these people are extremely credible. Why you would want to keep your assets in those markets at this time, really, it's very, very risky. So you want to own physical assets, physical gold, physical silver. If you are going to invest in oil, there is an ETF, an exchange-traded fund called U.S. Oil, and I do like that oil ETF because I do believe that oil is going to go substantially higher. Many analysts don't, but again, we've been right on the oil market, and I've traded oil for 35 years. Fortunately, I've been in this investment business for 35 years, and I thought that I had seen everything. I had gone through the markets in the mid-70s when gold was at 120 and went all the way up to 850. I was in the silver market back in 75 when it was down at $1.25, and ultimately in 1980 hit $52, and we made an awful lot of money in the markets at that point. Diamonds during that point, certain diamonds went up 500% during 79 and 80, and if you remember, those of us that are in our 50s, 60s, and 70s, you remember interest rates going up to 22%. That's what Japan is trying to do right now. They're reinflating their economy after being in recession for over a decade, and the U.S. is going to have to do the exact same thing. They're going to keep interest rates at zero for the next 3 to 4 years, and then they're going to have to reinflate the economy, and again, that's when we will see gold prices more than likely hit $4,000 or $5,000, silver in the $100 to $200 range. Those type of numbers are very possible and very real, and again, to be able to buy silver in the $30 range at this point, I believe is an absolute steal. Buy physical silver at $30 and just put it away and sit back and let the markets do their thing. And 5 years from now, when inflation's going to be in the double digits again, you'll cash in, and it'll turn out to be one of the better investments you've ever made.
Gold and silver were positive last year. They made money for their investors. As we went into 2013, I took a look at the landscape and I thought, I wonder if this will be the year that maybe the bull market ends. And you know what? It's not going to be, and it's not going to happen for a long, long time because of what's happening all around the world with monetary policy in Europe, Japan, the United States. You can see it with the fiscal cliff, the debt ceiling, currency wars, quantitative easing, situations in Europe where you have unemployment at 50% for youth, and you have, in some countries, 25% for adults. We're in a scenario where gold and silver, diamonds will do well for a long, long time. And it's all based on monetary policy. And we'll talk about it here in a second. But when it comes to investing in gold, silver, platinum, and palladium, and ask about platinum and palladium, they're getting very interesting right now. There's only one company Harold recommends, and that is Worldwide Precious Metals. He trusts them. He recommends them. Worldwide Precious Metals, a Canadian company. WWPMC.com is their website. Telephone number 1-866-623-2002. 1-866-623-2002. This is the only company Harold recommends you use. WWPMC.com. Worldwide Precious Metals, 1-866-623-2002. They're there to help you manage your precious metals investment account. You can trade the market if you want to buy or hold. And remember, they're there to maximize profit, minimize the risk. They're the experts in a very specialized market. Deal with people that have a proven track record, and Worldwide has been around for over 10 years. The metal can be stored on your behalf, delivered to your door. You can take physical possession of your metal anytime you want. Worldwide will go over all the different ways there are to be involved in this market. It is a liquid asset. You can buy and sell with a phone call. Speak with Worldwide Precious Metals, the only company that Harold recommends. He trusts Worldwide Precious Metals. WWPMC.com. Telephone number 1-866-623-2002. Get our free weekly newsletter. It is a must-read. You can get it from Worldwide. They'll be happy to send it out to you via email, free of charge every week. Listen to our radio show, get our newsletter. This week, Greg Hunter, who used to be with CNN, interviewed Peter Schiff. Peter, a strong advocate for hard assets. And in the interview, he said, get real money, gold and silver, as the Fed will not stop printing money. Schiff warns that Japan will likely stop buying U.S. government debt. He contends if the Central Bank of Japan has a choice between monetizing Japanese debt or U.S. debt, they'll go for their own debt. And that means the Fed has to print even more money. Closer to home, the new debt deal also means more money printing because of even bigger deficits, according to Schiff. The majority of the tax increases were canceled. The spending cuts were canceled. The Fed is going to have to keep buying bonds to keep interest rates from surging. He thinks that the Fed, they're basically putting away $85 billion a month into quantitative easing, and he thinks it's preposterous. They can't do it. The minute they basically take that cheap money away, the phony economy is going to crumble. What's not going to crumble is gold and silver. Even though precious metals have been down recently, he says, so what? Buy more. Look at the sell-off as an opportunity to unload more of your fiat currency and get into some real money. And in our newsletter, we have that story about Japan. And this is actually a real bombshell because you have a new prime minister in Japan coming in with heavy quantitative easing, wants to reflate their market, a target of 2% inflation when they're in deflation. That's going to be a lot of printing. In fact, Bloomberg had a story this week. You can read it in our newsletter. Gold lures Japan's pension funds as AB targets inflation. Japan's pension funds, the world's second largest pool of retirement assets after the United States, will more than double their gold holdings in the next 2 years as the new government pushes for higher inflation targets. So think about it. That's a lot of money that will be going into the gold market. Michael Pinto, he says what's happening right now is going to cause a panic into gold, and he talks in this article that Michael Pinto did through King World News about Japan being a real catalyst for a huge run-up in gold based on Japan and quantitative easing. Harold, we have about 3 minutes left in our first half of the show here, but this is a huge development. At the beginning of this year, we weren't too sure where the markets were going to go. But then you see the United States really do nothing with the fiscal cliff. They kick the can down the road, add $4 trillion worth of debt that was, that they already were going to be going in debt. They added another $4 trillion. You have this debt ceiling fight, and they're talking about a $1 trillion coin. Currency wars, Japan with the quantitative easing, high unemployment in Europe. It's a recipe for hard assets, low interest rates, and we're just going to see hard assets continue to do well for many years.
I believe you're right. And again, if Japan is coming out and saying we're going to inflate our economy by printing money and we want higher interest rates, and China is buying gold like it's going out of style, so is Japan, the fact is that follow the smart money. If it makes sense for them to do it, and this is what their plan is, then it makes sense for us to own some of it also. So again, in the U.S., you've got retail sales dropping, you've got a very bad economy, and again, the markets are just all over the place. All I can say at this point, it certainly warrants being cautious and not taking unnecessary risks. And again, follow the smart money. The smart money will tell you where to go.
Connect with Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website is wwpmc.com, wwpmc.com. Their telephone number, 1-866-623-2002. And if you do not receive our free weekly newsletter, now is the time to sign up. You can do that through Worldwide. They'll be happy to send it to you via email free of charge every week. We have tons of charts, quotes, information that is a must-read for your financial well-being. You spend a lot of time and money, obviously a lot of time making the money that you have, working very, very hard. You need to spend some of it educating yourself and protecting the money that you have and growing it in a hard asset such as a gold, a silver, a diamond. And one of the things that we have kept an eye on, to give you an idea of what the potential is for some of these markets, is the gold to silver ratio. And the gold to silver ratio right now is about 55 to 1, gold to silver. And if you do get to a price, let's say this year, there's some conservative estimates of around $2,000 on the price of gold. Here we are with a ratio of around 55 to 1. If it went to 50 to 1, $2,000 gold, the silver price would be at $40. So here we are today, around $31 silver. That would be an upside of looking almost $10 upside in silver. If the ratio was even better, 40 to 1, which could very easily happen if silver started to outperform gold, you would have a price of $50 silver. Now, if we got more aggressive into higher numbers like $2,500 gold, a 50 to 1 ratio would give you $50. A 40 to 1 ratio would give you $62.50. You can see the numbers are very, very exciting. Speak with Worldwide about starting your own precious metals investment account today. 1-866-623-2002. Their website, wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on January the 11th, 2013. Our time is 9:13 Mountain, 11:13 Eastern. The radio show runs on the legendary station in Toronto, News Talk 1010, and they are CFRB. Also, QR77 Calgary, 630 Chet Edmonton. If you ever miss a radio show, obviously we are online on Harold's websites, rarecoloreddiamonds.com and HESradio.com. You can stream the show there. We should remind you as well that we have a podcast. The podcast is through iTunes. You can listen to the radio show on your iPad, your smartphone, any device that's portable. You can take the radio show anywhere you want to go. So we are online, obviously on demand, and we go anywhere you want. If you ever miss a radio show, rarecoloreddiamonds.com, HESradio.com, and we have the radio show on our stations in Toronto and Edmonton and Calgary. and we have that podcast as well. We have a free weekly newsletter we would love you to sign up for. It's something you can go through in 5 minutes, be completely up to date on the markets, or spend hours if you want. Speak with Worldwide Precious Metals about getting our free weekly newsletter, 1-866-623-2002. Their website is wwpmc.com. You can speak with Harold as well. He has the newsletter on a weekly basis and also a monthly newsletter, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. One other site Harold has, and we should mention it, is hsfineauctions.com. And he has an auction coming up on January the 30th, 8 p.m. Eastern, 6 p.m. Mountain. It's a Wednesday. It's an auction you do not want to miss. And Harold will have more info here for you shortly. There will be an online catalog that will go up here in the days to come. We'll let you know about it. And Harold has just started doing market updates, and that will start on Monday on his two websites, hesradio.com and rarecoloreddiamonds.com. Both will have daily market updates as to what's happening in the financial markets. Our weekly update when it comes to our Diamond of the Week, and this is a must-have diamond, no surprise. RareColoredDiamonds.com has given us another stunning yellow diamond. It's a 2.16 carat cushion cut, fancy intense, yellow, internally flawless, our featured diamond of the week. Go to rarecoloreddiamonds.com and take a look at this diamond in the featured diamond of the week section. If you get our newsletter, a picture of it is there, a link is there. You can click on it and it will take you to the featured diamond. Harold, it's absolutely stunning, and we're excited about the auction coming up as well.
You bet. I'm very excited about the auctions. Again, they're worldwide now, and we have clients all over the world that attend our auctions. It's going to be on January the 30th at 8 o'clock Eastern and 6 o'clock Mountain. We're going to have some magnificent Argyle pink diamonds up. We're going to have some gold and silver coin sets. We may have a ruby or an emerald or a sapphire. I'm not positive yet, but we are going to have a phenomenal auction. And again, this is for our listeners and clients. What you'll do is go on to HS Fine Auctions. The catalog should be up next week. You'll be able to view the diamonds, all the gold and silver pieces, and the GIO reports and everything. Appraisals on certain pieces also. And what you do is you sign up. You'll get your password. And then on January the 30th, about 10 or 15 minutes before the time, just go onto the website. You'll see the clock counting down, and at exactly 8 o'clock Eastern, 6 o'clock Mountain, I will come on and do this live. This is the only live auction site in the world. Nobody else has anything like it, and we are the only company that created the secondary market to resell diamonds. I mean, diamonds have always been a strong investment, but within the industry, from one dealer to the next, from one cutter to the next. There has never, ever been a secondary market to resell diamonds. And it made no sense to me why this would not occur when it's such an amazing asset that could be sold all over the world in different currencies. It took us 2 years to build it. But it's something I'm very proud of. Our friends in Vancouver at Relentless Technologies built it for me, and it works perfectly. Again, it's not live streaming. It's a real live auction, and you're going to be able to participate. You have to sign in, get your password if you want to participate in the auction, or if you just want to view it, you must sign in. Otherwise, you will not be permitted in. It's an extremely exciting auction. It'll be on January the 30th at 8 o'clock Eastern Time. There'll be some beautiful gold and silver coin sets, and there'll be some phenomenal diamonds. I believe a green diamond will be coming up also. So mark that into your calendar. It's extremely important. With what's happening in the financial world at this point, not only in the United States, but all over the world, you've got the sovereign debt situation in Europe, and currencies are being debased. And Randy did a great job today on the radio show and in the newsletter, letting us know what's happening with Switzerland and with England and with all the currency markets. It's a frightening situation. There's been reports out lately that billionaires are dumping stocks, and economists know why. You've got to read this report. If you haven't seen it before, contact me and I'll send it to you. Some experts are saying, and this one particular expert has tremendous credibility, he says the Dow Jones could drop by 90%. If there's a chance it could drop by 50% or 40 or 30%, why would we want to be in that market in the first place? You haven't made money in stocks in over a decade now. in most cases. It's not the right time for that market. There's a reason why gold has gone from $250 to $1,900, why silver's gone from $4 to $50, and there's a reason why diamonds are going up by 25% a year and more. 25%, you tell me one other investment that is increasing 20 or 25% a year that has no risk to it. And the reason I say that there's no risk, because certain colored diamonds have never, ever fallen in price because there's so few of them. We've recommended to you over the years certain diamonds that have done nothing but climb in price. Now, it's something that you put away. It's not a short-term investment. You don't want to buy a diamond today and sell it a year from now just because it went up 25%. You won't make any major money on it. The reason for buying a diamond like this is to put away for the next 5 to 10 years. If you look at your RSP and you're sickened by the fact that you have not made money in your retirement savings plan by putting it in stocks and mutual funds for the last decade, you may want to realize that as a small investor, it's not going to happen for you. There are certain assets that you'll do way better with. If you bought a yellow flawless diamond for $20,000, and they have to be the internally flawless, anything under that doesn't have the track record of increasing by up to 25% a year. But if you put $20,000 into a yellow flawless diamond, either put it away in your safety deposit box or put it into a ring for your wife, in 10 years that diamond's going to be worth $80,000 to $100,000. You tell me any other investment that can give you that type of return with the safety that you have in the diamond market. The other thing is that when you see how our auction works, you'll be excited to sell your diamond 5, 10 years down the road. In fact, that's how we make money, is on our auction business. When our clients invest in diamonds and you sell that diamond through us, we get 10% of the profit. So if you do well, we do well. If you don't do well, we don't do well, and that's the way it should be. If you put $20,000 into a yellow flawless and in 10 years we can sell it for $100,000 and you make an $80,000 profit, we get $8,000, you get all the rest. The other diamonds that we want to recommend to you are the Argyle pink diamonds. The Argyle pink diamonds are the most concentrated form of wealth in the world. They're small little diamonds that are worth so much, and 95% of them are produced in one mine in Australia called the Argyle mine. That mine is scheduled to close in 2018, which is 5 years from now. Only 5 years. Give it 2 years for these diamonds to run out, and we anticipate that Argyle pink diamonds will increase by 8 to 10 times. That's 800 to 1,000% return on these Argyle pink diamonds if we're right on this market, and I don't see any way in the world that we're not. The reports on Argyle pinks, the marketing that Argyle does, the acceptance of these markets all over the world at the tender, and just by looking at them, you'll understand how magnificent they are. And my clients that own these diamonds have done nothing but make money in the diamond market, because the Argyle pinks also go up by 20-25% a year, but as we get closer to the mine closing down, these are the diamonds that can absolutely hit a home run, and they can go up 800 to 1,000%, meaning that a $50,000 Argyle pink can be a $500,000 return to you, and again, we could actually get that in a stronger currency. So I'm very excited about what's happening in the diamond market. The yellow flawlesses, we carry the fancy light yellows. Those are the canary diamonds. We also carry the fancy intense, the fancy yellows, the fancy intense, and the fancy vivids. I want to spend 1 second on the fancy vivids. It's the highest color grade, the best color that you can possibly get. There was a time that we had a fair amount of these vivid yellow flawless diamonds. Our clients over the years have bought them. They've skyrocketed in price, and now you can't get them anymore. In fact, if you look on our website, we have 4 or 5 vivid yellow flawless diamonds. The reason is that these diamonds come from so far below the Earth's surface, and they come up by volcanic eruption. And certain diamonds, like these vivids, these very, very deep and amazing colors, they come from very, very deep within the Earth's crust. They're just not getting these diamonds anymore. And the fact is that there's very, very few vivid yellow flawless diamonds. There's 4 or 5 of them on our website right now. Most of them will be gone within the very near future. And these diamonds can now double every 2 or 3 years. They're so hard to get. There's one of them that's over 6 carats. It's a 6.5 carat emerald cut. That diamond is now up to over $1,300,000. 10 years ago, you could have bought that diamond for 10% of what that was. So you want to get these diamonds while they're still available. They go up more than any other asset, and they never, ever decline in value. You want to get the fancy light yellows. They start at about $15,000. They're canary diamonds. They're absolutely beautiful. They're a very soft, gorgeous yellow. Then on top of that, you've got the fancy yellows. They're in the 20,000 range, and they're stronger in color than the fancy lights, but not as strong as the fancy intense and obviously the fancy vivids, which are the strongest colors of all. But all of them have a track record. As long as they're the better colors, and as long as they're the internally flawless, they're going to go up in value by about 20 to 25% a year. And the biggest thing is that if we get the inflation that we're looking at, that I'm positive we're going to see 5-6 years from now, these are the diamonds that went up 500% in 1979 and 80. The Argyle pinks, that, in my opinion, is a locked-in winner. When you take 95% of any commodity off the market, the prices are going to go higher. These are going to go tremendously higher. And again, we know that with blue diamonds, in 2005, when a major mine closed that produced blue diamonds, they were $200,000 a carat. Now they're $2 million a carat between 2005 and 2013. That's how much these diamonds go up when their supply is cut off. The last group I'm going to talk to you about is a colorless diamond. They're D-flawless white diamonds. The reason I'm bringing these up is that they represent 0.001% of the entire diamond market. They can be 10 to 20 times what a normal white diamond would be worth. In fact, some of them are worth as much as pinks. And the fact is that the only mutual fund that has ever been approved in this world has just been approved in Europe out of Luxembourg, and they are permitted to purchase 1 to 5 carat round brilliant D-flawless diamonds. Well, we have those diamonds, and we will be supplying this fund on an exclusive basis. We cut about 900 carats of these diamonds a year, and that's it. They will buy the majority of those 1 to 5 carat D-flawlesses. It would be very smart for you to pick up one of these diamonds while you can still get them. They're extremely perfect diamonds in every possible way. In fact, many of ours are triple excellence, mean excellent in cut, polish, and symmetry. D means colorless, and flawless means the best clarity that you can get. So, again, that's our top recommendations, is to get into the diamond market. There's no assets right now that can return what diamonds can return with the safety that you have in the rare colored diamond market. We have clients now all over Europe and in Asia, and we're expanding into South America as we just hired a new PR firm that will take us to a brand new level. All we want is for our clients to do well and get through these difficult times, and you're going to get through it in gold, silver, oil, and rare colored diamonds. Make certain you tune into our auction on January the 30th at 8 o'clock Eastern, 6 o'clock Mountain, and even if you don't participate, you're going to see one of the most exciting auctions you've ever seen in your lifetime, and by next week, all of the inventory will be up in the catalog section.
Connect with Harold at rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Maybe you do not prefer to do business over the internet. Speak with Harold personally and privately. 1-800-432-1022, rarecoloreddiamonds.com. Harold, I have not seen this article that you were talking about regarding billionaires selling their stocks, but one story I did see this week, I did not include it in the newsletter. I really didn't think it was that big of a deal. But Lorraine Harper, who is the wife of our Prime Minister Stephen Harper, they had to disclose anyway. They had to disclose that she has sold all her stocks now. So it starts to make you wonder when you hear that the Prime Minister's wife sells all her stocks and we have these billionaires getting out of the stock market. What do they know that we don't know? And it does raise some suspicions, to say the least.
Well, let me just take a couple seconds and just read part of this to you. And again, if you have not seen this in the past, contact me and I will send it to you. But they do say, despite a 6.5% stock market rally over the last several months, a handful of billionaires are quietly dumping their American stocks, and fast. Warren Buffett, who's been a cheerleader for U.S. stocks for quite some time, is dumping shares at an alarming rate. He recently complained of disappointing performance and dyed-in-the-wool American companies like Johnson & Johnson, Procter & Gamble, and Kraft Foods. In the last filing for Buffett's holding company, Berkshire Hathaway, Buffett has been drastically reducing his exposure of stocks that depend on consumer purchasing habits. Berkshire Hathaway sold roughly, listen to this, 19 million shares of Johnson & Johnson and reduced this overall stake in consumer product stocks by 21%. Berkshire Hathaway also sold its entire stake in California-based computer parts supplier Intel. With 70% of the U.S. economy dependent on consumer spending, Buffett's apparent lack of faith in these companies' future prospects is worrisome. Unfortunately, Buffett isn't alone. Fellow billionaire John Paulson, who also made a fortune betting on the subprime mortgage meltdown, is clearing out of U.S. stocks too. During the second quarter of the year, Paulson hedge fund Paulson & Company dumped 14 million shares of J.P. Morgan Chase. The fund also dumped its entire position in discount retailer Family Dollar and consumer goods maker Sara Lee. Finally, billionaire George Soros sold nearly all of his bank stocks, including shares of J.P. Morgan Chase, Citigroup, and Goldman Sachs. Between the three banks, Soros sold more than 1 million shares. Why are these billionaires dumping their shares of U.S. companies? You got to read the rest of this report. Contact me. I'll send this to you out free of charge. Email it to you. You got to see it. You got to open your eyes to what's happening in the world today and not just sit there and say, I don't know what to do. You're much better off selling your stocks. You're not going to make any money in that market if the top billionaires in the world are getting out of it. Follow the smart money. If Japan is buying gold, if China is buying gold, follow the smart money. It only makes sense. We work way too hard to blow all of our money in a market that can drop by up to 90%. And again, the gentleman that wrote this, you got to read the article. He's got all the credibility in the world to back up this article. So what we need to do at this point here, it's going to be a tough year. There is no doubt about it that everybody is jockeying for position. There's no rhyme or reason to the markets at this point. One day they're up, the next day they're down. Nobody can figure out what's going on. You're much better off in cash, gold, and diamonds than you are in anything at this point. Buy physical gold, buy physical silver at $30. I don't think that silver at $30, I think it's got to be one of the best investments you could possibly make. And then diamonds are doing nothing but going up in price. And again, you're going to see the auction on the 30th and realize what our company has done. We built the only secondary market to resell high-end collectibles. Nobody's ever done that before. I'm extremely proud of what we've built and how well our clients have done over the years, but by far the best is yet to come. The next 5 to 10 years, I anticipate that our clients in diamonds will make a fortune in this market. If I'm right, interest rates will be back up to over 10, 15% within the next 5 to 7 years, and wouldn't it be amazing to liquidate our hard assets and be able to put our money in the bank at 10 or 15%?
Speak with Harold about the featured diamond of the week. It's a 2.16 carat cushion cut, fancy, intense, yellow, internally flawless. See the video at rarecoloreddiamonds.com. Have a picture of it in the newsletter, a link where you can click and takes you through to the website. Absolutely stunning. It was interesting this week. There were 2 blue diamonds found at a mine in Botswana. And the reason it's interesting is that they found these 2 diamonds, and blue diamonds are so rare and so hard to find that it was a major news story. That's the rarity of this market. We have 2 other stories that are must-reads in our newsletter. We talked about that special report from Bain & Company with tons of charts and why you want to be involved in the diamond market due to the demand over in Asia. Harold can send you that as well. But Asians will buy more diamonds than Americans by 2020. The United States remains the world's largest diamond market, but the rapid growth of consumers with growing disposable income in China and India is helping drive a rebound from the economic downturn 4 years ago. Most consumers of diamonds could be in Asia by the end of the decade. And they're actually saying in this story that by 2020, it's really going to be a game changer when it comes to the diamond market as people in Asia start to not only buy for engagement rings and investment, but you have a whole new market that's opening up. We have another story. A diamond is forever dependent on return on investment. And that's what they did a survey, and they asked people over in India and China how they see diamonds, and they see them as, yes, obviously something beautiful to put on your finger, around your neck, on your ears, but they also see them as a way to make money. And Harold, this is something that you brought to us back in 2005, investing in diamonds, investing in hard assets, and that's something that's been happening over in India and China for a long time. People buying gold and silver, and now they're starting to accumulate another hard asset, that is diamonds. And this Bain article is a must-read because it opens up your eyes to the potential of diamonds. Now, you go to another level, which is we're in rare colored diamonds, which is a fraction of the overall diamond market. And it says to you that this is a rare market that is only going to increase in value because it's so rare and so many people will want to have that asset.
You bet. Again, I'm very proud of the recommendation. It's done extremely well, but by far the best is yet to come. In that article, they also say that almost 45 to 50% are women, and they're buying diamonds not only because they're beautiful, but mostly because they make money. So, again, it's a very, very important time. If I was to say to you, go ahead and buy a diamond and not have a way for you to resell it, again, I'd be like the other people out there that have basically copied our company type of thing. They have no way of reselling your diamond, but we put the money and the time into building that secondary market, and we've now turned it into a world market. So again, I'm very excited about it. The returns are going to be very, very strong, but it's not a short-term investment. It's something that you want to hold on to. In actual fact, what a lot of clients do is they buy these magnificent museum-quality pieces, and we put them into museum-quality jewelry that sell for even more at auction. So the fact is that when you own an asset as beautiful as a yellow flawless, which is what my wife wears, or argyle pinks, or these magnificent flawlesses, to put them on your wife's finger and let her enjoy it, or that type of thing, and then sell it down the road, just a very, very exciting asset to own. And again, when you see them in person, you're just not going to believe how beautiful these flawless diamonds are.
In our newsletter this week, there's a chart, and it's an inflation chart since 1775. And you can see on this chart, inflation really took off in the 30s, 1933, due to the fact of the abandonment of the gold standard. And that's happened all around the world. Take a look at that chart. That's the reason we're in hard assets. To protect the money that we have, we go into hard assets so we are not debased as we see the currency wars around the world. There's another must-read article in our newsletter, Ask Worldwide or Herald About It, 10 Steps to Safety. It's by G.E. Christensen, and he says in here, phase out paper assets and get into something real. Gold, silver, diamonds, farmland, rental property, and buildings come to mind. And he says the best time to start preparing was about a decade ago. The second best time is today. Make a plan and act. And you can read these 10 steps to safety. I think they're all 100% spot on. Worldwide will be happy to send them to you, and so will Harold. We have about 30 seconds left here, Harold. We should mention HS Fine Auctions, auction Wednesday, January 30th, 8 Eastern, 6 p.m. Mountain. Go to hsfineauctions.com and sign up. You do not have to take part in the auction. You can just sit back and watch. When you feel comfortable, if you want to bid, you can, but there's no obligation. If you'd just like to be a part of it, go to hsfineauctions.com, sign up now. January 30th, a Wednesday. You want to be a part of that auction. It will be very exciting, Harold.
You bet. Again, I'm very, very excited about the auction coming up. We've got the market report starting on Monday, so you can follow what's happening in the markets every single night, Monday to Friday. And again, it's all good. So stay safe. Keep your money safe. I wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold Siegel. Connect with the company Harold recommends you use when it comes to investing in precious metals, gold, silver, platinum, palladium. We do have information on platinum and palladium in our newsletter this week. It's getting to be very interesting. The company is Worldwide Precious Metals. The only company Harold recommends you use, wwpmc.com, telephone number 1-866-623-2002. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.